It is time to talk about your money right here on Good Morning Quad Cities. Let's go ahead and take a look at how the stock market is doing at the end of last week's trading. The S&P was up 2.5%. NASDAQ also up over 4%. Dow Jones Industrial Average is also up almost 2%, as you can see right there. The sum of all goods and services produced for the period of October through December, that went up 2.9% according to the Commerce Department. And economists had expected a reading of about 2.8%, so slightly better than expected. Consumer spending weakened from the previous period but remained positive. And joining us now to break this all down is our financial expert, Mark Gravicheski from the Quad Cities Investment Group. Good to see you.
Good morning. Happy Monday to you. A little bit chilly.
A very chilly Monday morning. But let's dive into the numbers here. Break down this report for us. What does it mean?
Well, anytime you talk about economic growth, you really need to, dive into the metrics, the numbers of what's driving that headline growth rate, in this case 2.9%, because the main driver of the U.S. economy is consumer spending, which drives almost 2/3 of our nation's total economic growth. Now, in the fourth quarter, the growth rate for consumer spending, very respectable 2.1%, but that was partially offset by significant declines in business spending and that residential housing sector. In fact, one of the main drivers of this economic growth in the fourth quarter, and was this significant buildup of inventory by retailers to ensure they had enough goods on hand for the November, December retail holiday shopping season. The problem with that, though, Ann, is that just kind of provides a short-term, quick boost to the economy. So when you look at the entirety of the report, it becomes a little bit more mixed.
So what does this mean, the latest news that's coming out about the fourth quarter, the October through December spending period? What does this mean as we continue to talk about what looks like going to be a recession?
Well, as you mentioned, the fourth quarter a little bit better than Wall Street was expecting. However, in my opinion, it really doesn't change that narrative much for what we should see in 2023 for a couple of reasons. If we look back here, Ann, in the first and second quarter of last year, the economy entered this technical recession defined by 2 consecutive quarters of negative economic growth. Now, it wasn't defined as an official recession because we still had relative strength in consumer spending, industrial production, and many other key parts of the economy. The problem now, however, Ann, is we're starting to see many cracks form in some of those once strong areas of the economy. And second, I think it's the eventual fallout from these rising interest rates, which again act as a tremendous weight and strain on the economy. In the short term, those interest rates are expected to go even higher.
Yeah, housing, I just read an article it's calling it the housing slump, although I know some people still selling their houses in this market these days.
A little bit more difficult to sell, though.
Absolutely a little bit more difficult. So is there any prediction of when we might see a recession?
Well, there's still, tremendous debate on Wall Street as to the extent of what this recession may be. Short, mild, long-term, much more severe, we just don't know. As for timeline, the general consensus is that, most likely the second half of this year. However, we're starting to hear more and more comments that maybe that timeline starts getting pushed a little bit closer, potentially into the first 6 months of this year.
I know we want to talk about, there's a jobs report that's coming out at the end of this week, so I know we want to talk about next week about who's hiring, who's not hiring, how many layoffs we're actually seeing, and how all of this is impacting the economic world in terms of jobs. So we'll talk about that coming up. All right, do you want to say something? Sorry.
No, go ahead.
We're running out of time, but I know we were briefly discussing it over here in the corner.
We'll be covering that next week, a little bit more in more detail.
We call that a tease, Mark.
Absolutely.
Thank you. All right, let's go ahead and send it over to here, Good Morning America, and here's what's coming up in about 40 minutes on Good Morning America.